The income statement is one of three important financial documents that you will need to be familiar with as a business owner. The purpose of the income statement is to report the total amount of current income for your business at specified time periods. Reporting can occur quarterly, which is every 3 months, semi-annually, which is twice a year, and or annually, which is yearly. Terms you will need to be familiar with when creating, reviewing, and analyzing an income statement are income, expenses, profit, loss, gross, and net. Income is the event that results in money flowing into the business. For example, if your business were to sell 16 pizza pies per day, the amount you receive from your customers, whether it be cash, credit, or debit, will be reported as income. Expenses are the events that result in money flowing out of the business. For example, if your business has to purchase new ovens to heat up the pizza, the amount for that purchase will be reported as an expense. Profit is the amount you are left with when your total income exceeds your total expenses. For example, if your total expenses for your business was $15,000 and your total income was $20,000, your business will have a reported profit of $5,000. Loss is the amount you're left with when your total expenses exceeds your total income. For example, if your total expenses for your business was $20,000 and your total income was $15,000, your business will have reported a loss of $5,000. Gross is all money earned before taxes. For example, if your business made $250,000 its first year in operation and didn't pay taxes, the gross amount for the business will be recorded at $250,000. Net is all money earned after taxes. For example, if your business made $250,000 its first year in operation and paid $25,000 in taxes, the net for the business will be $225,000. Because profits and losses will be calculated in the income statement, the statement will also be referred to as a profit and loss statement. Now that we have a basic understanding of these terms, let's look at a sample income statement. This is a simple income statement for XYZ Incorporated. This income statement was created on a spreadsheet, which will make calculations very easy. You'll notice that there are only 3 columns that are necessary for this particular statement: column A, column C, and column D. In column A, we notice 3 important categories: income, expenses, and net profit. Under income and expenses, there are subcategories. These subcategories identify specific activities of the main category. So as we notice, under income, we have the subcategory services rendered. Services rendered is a specific activity that created the income. The same applies to expenses: salaries, telephone and internet, water and electricity, property rates and taxes, insurance, advertising costs, fuel, stationery, bank charges / interest paid, and tax expense are all individual activities that make up the total expenses. Column C is used to insert the data for each subcategory, the amount for each specific activity. Column D is used to insert the total of each subcategory, which will then become the total for the main category. So as we see with services rendered, the total amount of services rendered is $94,600. So the total income reported will be $94,600. The same applies to expenses. If we add the subcategories from salaries to bank charges, we would get the total expenses, which is $60,366. In this statement, we will not add the tax expense with the other expenses because it is a separate expense that will be calculated to determine our net profit. To calculate the net profit, we will subtract total expenses and tax expense from total income. So, to find the net profit for XYZ Incorporated, we will first subtract total expense from total income. So, $94,600 minus $60,366. This gives us a total of $34,200. $234. Now, we subtract the tax expense from our new total, which would give us our net profit, which is $30,820. To perform the calculation using a spreadsheet, we can add a formula in the cell we want to insert the data for net profit. In this case, it would be cell D16. In cell D16, we will insert the following formula. Equals D1 minus D4 minus C14. And press return or click in another cell. This will give us our total net profit of $30,820. Remember that losses can also be reported on an income statement. If using a spreadsheet, insert the correct formula so that the spreadsheet can perform all of the necessary calculations for you. Make sure to insert all the correct data or you will end up with a report full of errors, which is never good for your business. As we wrap up this lesson, consider the following questions. What is the purpose of the income statement? If using a spreadsheet, what is the easiest way to calculate numerical data?